by our analysis, we are correcting what I would describe as a supercycle degree advance that began in 1932 and terminated in January of 2022. That's a 90-year Gann cycle advance. And in our opinion, you cannot correct a 90-year advance of that magnitude in 9 months with a 25% price decline. It's our opinion that, there's an old saying, when in doubt, zoom out. Okay, we need to zoom out and take a look at this from a completely different perspective. We have epic bubbles in debt, okay, in derivatives. And let me just quantify some of these epic bubbles. Okay, we've got about $300 trillion in notional value of global debt, slightly more than that. If you look at derivatives, it's multiples of that. We have now exceeded a trillion, that's 1 quadrillion in total derivatives. Those are over-the-counter commitments, right? They're over-the-counter transactions that all have a counterparty. And if one of those counterparties fails, the entire system fails. Nobody knows. A lot of these swaps have been traded so many times, it's like a ball of yarn with 2 pieces coming out of either end. You don't know what's going on inside the ball of yarn, or where it's connected, or where the knots are tied, or where it's frayed. And I think a lot of people are staring at this situation in the UK and going, oh, well, the Bank of England came in and they just raised rates. Everything's fine. That is so far from the truth. Or don't worry about Credit Suisse. The regulators have already identified this. They're going to come in and swoop in and save the day. They can't, okay? They're not big enough to save the entire system.